Okay, it's 8 p.m. and I think we're going to get going. Welcome, folks. This is the quarterly webinar presented by the Florida Fairtax Educational Association, but it's for everybody, anywhere in the world, technically. Jade Waller will be our presenter. Jade is a CPA from Colorado, discovered the Fairtax a number of years ago, has become very knowledgeable about it. And he's got his slideshow up there. So I'm going to turn it over to Jade, and I'm going to mute my microphone. So take it away, Jade.
Thanks, Ron. Well, welcome, everybody. Thank you for taking some time out of your evening to learn more about the Fairtax or otherwise support us here. Briefly go over the logistics here today. I'll go through the slides. If you do have questions along the way, please use the question feature, and Ron and Elaine will try to snag me and slow me down, and we can post the questions and answer them as we go. Some of them we might push off to a later stage, or we can answer them at the end. We can really do it however you want to do it, and we're very flexible, so it's not a rigid format. But there's a question feature in the Webinar Ninja technology to just if you're live with us here, you can ask. Special thanks to Ron and Elaine. They really make the technology magic work with our webinars here and in the functionality with Webinar Ninja. So Ron and Elaine, thank you. And they pretty much try to set it up for me so I can just kind of make my presentation. So I really appreciate that. So let's dive right in. As far as the agenda, we'll talk a little bit about what the true costs of our current income tax system are. And really, that's the bulk of our presentation. But I'll start out with a brief introduction of the Fairtax. Since we won't talk directly about the Fairtax that much in this presentation, I'll give you perhaps a 5 to 7 minute introduction, just in case we have a few new folks. And then we'll just dive right into what are the true costs of the income tax. And then we'll close out with some Q&A. So let's dig right into it. So if we start with the Fairtax, the Fairtax has a few core principles. It's based on the idea that it needs to be simple, fair, voluntary, transparent, border neutral, and industry neutral. A key concept here with the founders of the Fairtax was that there were no winners or losers. Another key tenet of the Fairtax is that it's fair. This means that items are taxed once and only ever once. So if you buy a new item and pay the Fairtax and then sell it as a used item, the new buyer doesn't have to pay the Fairtax, and you as the seller of the used item don't have to collect it. So what is the Fairtax that we're so excited about? It's a national consumption tax that broadens our current tax base from about 5 trillion of taxable income to about 9 trillion of taxable consumption expenditures, which is really the magic. And because it's based on the principle that there's no winners or losers, there's no exclusions from our nation's consumptions of new goods or services, except for higher education, which is deemed an investment, and the sole exemption out of the entirety of the Fairtax. So it's a national consumption tax on purchases of all new goods and services, currently estimated to be at 23% an inclusive rate. And in order to be revenue neutral, meaning it's not a spending reduction plan, but simply a different and more efficient way to bring in the same treasury receipts that are currently collected under our U.S. and income tax system, it really is an amazing system. It also drastically reduces, if not eliminates, and we'll talk about this a little later, the nearly $700 billion in annual illegal tax evasion we experience under our current income tax system based on IRS data that's published. So what does the Fairtax do? It means no more income taxes for individuals or corporations. We're going to let that just sink in for a little bit. That means no more tax returns, no more individual tax compliance with instruction forms. Corporations have zero income tax. and don't have to deal with an income tax whatsoever. No consumer record keeping requirements, no shoe boxes full of receipts. The Fairtax replaces about 96% of current federal tax receipts. It doesn't replace a few things like the federal gasoline tax you pay every time you fill up your car, but it replaces virtually all the Treasury's receipts. So what does it specifically eliminate? The income tax, the corporate tax, the alternative minimum tax, which was eliminated for corporations with the Tax Cuts Act a year and a half ago, but it has not been eliminated for individuals with incomes over a million. So that AMT finally goes away. The death tax, in more civilized circles, this is referred to as the estate tax. That goes away. Capital gains tax, so taxes on your investments and your returns and your growth. Self-employment tax, that's the worst tax on small businesses who don't really receive a W-2, but they end up having to pay tax on themselves as employees and then match it. So it's like a 15% tax. Gift taxes goes away. And then, of course, the FICA, the Social Security and Medicare tax, which actually are the most regressive tax of all and have the horrible effect of really knocking it into the teeth of our working poor. So while the wealthiest among us, those not earning a paycheck with a W-2 each year, but living off investment capital gains, they don't pay a dime to Social Security, but our working poor do. And over 40% of all tax receipts in our U.S. Treasury come from that payroll tax. We tend to forget about that payroll tax when we talk about the income tax, but it's a income and payroll tax system. So what else does the Fairtax have? It has a prebate. So right off the bat, if any of you are new to the Fairtax, you might have thought, national consumption tax, it's probably regressive. And that's the natural thought, and actually it's a correct thought on most sales taxes. However, the item that makes the Fairtax fair is the prebate. So it basically takes the Department of Health and Human Services poverty guidelines each year, and that's let's say for a family for this year is $33,820. You multiply it by the tax rate, so 23%, and it means that family of four would get $7,779 refunded to them. That's $648 a month to reimburse them for the taxes they pay on the basic necessities of life under the Fairtax system. So that really basically makes your spending up to the poverty level, in this case $33,820, at a 0% effective consumption tax rate. And likewise, if you spend $35,000 or $40,000, your effective tax rate is minute, like say 1%, 2%, 3%, and slowly grows. But because of that prebate, it actually creates a more progressive tax rate than our current income and payroll tax system combined, it's really mind-boggling. Another thing the Fairtax does is, let me look at comments here. Okay, just making sure there's no questions here. The Fairtax also eliminates embedded taxes that have ingrained themselves into the cost of every good and service we purchase and consume every day. Dr. Dale Jorgensen, the head of Harvard's economic department, a while back concluded that on average about 22% of the cost of everything we purchase is made up of embedded taxes along the way. So what does that mean? So a few examples, like the 7.65% FICA payroll match for every employee's wage that an employer pays. Sometimes we forget that FICA tax is mandated to be matched by employers. So it's just another cost of doing business that gets embedded up into that cost. All that goes away. Also consider federal income taxes that corporations pay. Again, another cost of doing business that gets ingrained into the total buildup of costs. And they kind of add on. If you're a company, you have to add on and increase the price to maintain a profit margin. And because everyone is hit with the same dose or the same glass of water in their face, so to speak, it's competitive such that you can sustain a higher cost, which we all pay at the register. What else? So with competition, or at least semi-efficient markets, prices will come down drastically if you get rid of the income tax and replace it with the Fairtax. So some espouse that companies would just pocket these extra profits from these costs falling out of the buildup of the price of their goods or services. And there's actually been studies that prove once those costs fall out, it's just a matter of time, and most of the time days, before competitors are at each other's throat to gain market share and take away market share, and try and beat their competitor. And that's the beauty of an efficient, or at least semi-efficient, capital market that we have in America. So who pays the fair tax? Everyone in the U.S., whether we're citizens visiting here on tourism, legally immigrating here, or staying here illegally. Everyone pays it when you spend money on new goods or services. Now, whether these people gain their income from legal and law-abiding salaries and wages, or underground, illegal, and otherwise nefarious means, it doesn't matter. You spend at the register, and so you will finally pay your federal burden if you're a criminal. If you buy used goods, you're not paying the fair tax. It's what you might call the one big legal avoidance under the fair tax. So if you buy a used home, and 88% of all home purchases are used, one of your biggest lifetime expenditures avoids the fair tax. So fair tax is collected. Real briefly, all states would collect the federal sales tax, the fair tax, at the same time they collect their state sales tax, which virtually all states have in the works. Vendors are the first line of defense, however. So all your retailers, imagine Best Buy and Walmart, they collect the state sales tax at the register. They just now also collect the federal fair tax, and they remit it up to the state. The vendor gets a nice little collection fee, 0.025% of the funds collected, and then the state gets a collector's fee as they remit it on to the national treasury. So the great thing about the fair tax is it actually gets rid of a lot of the incentive to cheat, if you will, but it also, as we'll talk about later, lowers the number of tax collectors drastically, because there's only a few retailers that make up the vast majority of our sales, and it actually pays them for collecting tax. So as a U.S. government, it always kind of hit me that you had nearly 200 million individual income tax payers, and we're basically, as individuals, collection agents for the U.S. Treasury, and we've never been remunerated and paid back for that. So interesting. Got a note from Randy here. Would goods that have higher labor costs and or greater number of component parts have higher embedded taxes? Would those cost eliminations tend to make those goods drop more in price if market forces worked? I think Randy is spot on. I think that answer is yes. If you have, maybe your industry is highly manual labor intensive, and so you've got much more FICA, payroll tax matching and other costs. I think that answers yes. If you have an industry where you just, maybe you don't have good tax accountants, or maybe you just are in an industry that doesn't get favored tax treatment from IRS lobbying, and you end up paying a ton of corporate income tax. That could be another way that those type of businesses end up having a bigger drop in costs than those otherwise. So moving along here, finally, just to wrap up what the fair tax is before we jump into the cost of the income tax, to avoid the potential of both a sales tax and an income tax, like many European countries have. The Fair Tax Act specifically mandates that the 16th Amendment that allowed the income tax in the first place back in 1913 be repealed. Must be a separate legislative process because, a constitutional amendment requires 2/3 of the House and Senate and 3/4 of the states to ratify. So you can't wrap up that particular legislation in the fair tax. So let's move into our materials for the day. What are the true costs of our income tax system? So you see here, evasion, $700 billion a year and growing. That is a huge study, and it's actually a recalibrated study that the fair tax and the FFT paid several PhDs, actually. Dr. Sabula is the main one. In 2017, to perform a very granular, detailed study. Now, I've only read like the 5 or 6 page summary, but there's reams of details beneath it with, if you remember statistics class in college, with all sorts of, Greek symbols and mathematical equations that I can't follow. But basically, we're at 693 billion of illegal tax evasion a year. But the study showed that that's trending up in just really 7 short years by 2026 to be 1 trillion a year. It's growing. That rate of evasion is growing much faster than our population growth and our U.S. GDP growth. Primarily due to our gig economy with the millennials and so many folks working so many different types of jobs. Society is also becoming more cashless, and this makes evasion under the Fairtax, if we were to go to the Fairtax instead of the income tax, even more difficult. But under the income tax, a cashless society does not bode well for tax evasion. That's why those stats are going up. Well, so within this cost of evasion, what about a national consumption tax? Well, studies show to date that a national sales tax would be minuscule. We're talking in the 1 or 2% evasion rate. There'd always be something, as long as there are human beings involved, there'll be evasion. But relative to the national income tax, evasion basically drops off the face of the earth. From an underground economy perspective, the criminal organizations, gangs, human trafficking, prostitution, and all those, like we mentioned, they finally pay their full federal burden. In that 700 billion of evasion goes down quite a bit because it's just the way the Fairtax is set up. Everyone pays it. I guess it's another way to say that it's a natural encouragement for compliance versus evasion. It's important to note when we think about evasion here, it's like, well, how many tax collectors will we have? You talked about how many we have now, almost 200 million individual. Well, right now there's 100 million total U.S. businesses. A lot of those are passed through that go to the individual income tax return, like, from an S corp or partnership perspective. But out of those 100 million U.S. businesses, only 2.5% are retail. So 2.5 million businesses in the U.S. are retail. And of those 2.5 million, 15% of them are about 375,000 businesses. I know this is radio, so numbers are hard, but bear with me. Those 375,000 businesses make up 90 to 95% of the sale of all goods and services, meaning you only have compliance worries with 375,000 businesses as opposed to 200 million plus income tax collectors. Under the Fairtax, you basically have a few 100,000 businesses that you'd have to worry about, and the states take care of that. So it's really amazing. Let's go to compliance costs. But on evasion, it's a huge burden, and there's tons more statistics we could go through. But basically, Ron, Elaine, Randy, everyone on this webcast, and all of Americans end up paying the price for that evasion, for all those folks who don't pay their fair share. So compliance costs, $600 billion a year. When you go back to the original Fairtax studies, these compliance costs, which actually have grown higher than this, I don't have an updated stat, that's not included in the estimated reduction in prices from taxes falling out and from an embedded perspective out of the cost of everything that we buy. So this is an incremental cost, $600 billion. This is not insignificant. That's almost as much as our national debt each year, which is about $1 trillion we're running the past 10 years or so, $1 trillion a year. This is $600 billion a year that falls out of the price of everything that we buy, and that's not even included in our estimates. So you're really dropping a huge amount out of the cost of what we pay. Now, you'd have some compliance cost if you went to the Fairtax, but you're talking in the single-digit percentages, very small, because again, you only have 2.5 million businesses that even have to worry about it, because this is a point we usually have to say 2 or 3 times. Under the Fairtax, business to businesses sales, which is the vast majority of business sales, don't have to collect any Fairtax. It's only businesses that sell at a retail end user consumer level that pay the Fairtax, those 2.5 million businesses. So the compliance costs in this country go from 600 billion, and I venture a guess to be, 100 million or so. So you're talking exponentially lower. Now, I put in here 6 billion hours of time spent complying with taxes each year in the US. That's a stat, and I did this on purpose. It's actually from 10 to 15 years ago. You know what that figure is now? We're at 8.9 billion hours of a year spent to comply with the U.S. individual and corporate income tax and payroll taxes. 8.9 billion hours. Now, I did this on purpose because we need to understand the growth of this problem. So all these costs of the income tax we're talking about now, some of the stats are a few years old, some of them are pretty up to date. But if you think about it, are they going up, or are they going down, or are they staying constant? These are all going up in the future. And if you say, say 6 billion hours went to virtually 9 billion hours, well, that's a 50% increase in 10 to 15 years. That's incredible. So it's important to know that those costs drop out. And if you think about it, what do these costs include? Well, they include salaries of tax accountants, office supplies, office space. There's some large companies I've been involved with. They just have like a whole floor of payroll tax accountants. You've got top tax software system packages, special bank accounts, IRS audit time. The list goes on, but you can see how you can get up to that 600 billion a year really easily. And then you think about what would these companies do with this extra money? Well, again, it's a cost that falls out of the price of everything we buy, or there's a handful of things that happen. The company invests more in R&D. Maybe they really wanted to have some capital projects and some growth, build that new plant in Ohio or something. Now they've got at least the optionality to go about that. Innovation, new products, and then lower cost products, and even potentially higher wages, more employees. We don't realize sometimes we only focus on employee wages. We don't realize the tax burdens on corporations, especially small businesses, actually can dissuade them from having employees at all. Or if they have 6 employees, they would really prefer to have 9 or 10 to grow their business, but they can't afford it. So those are some of the effects there. So let's go. Cost of an exhausted income tax base. So we mentioned this earlier. Under the Fairtax, you'd have a $9 trillion cost base. And again, I'm assuming we'd get rid of this cost of the income tax system with the Fairtax, because this is a Fairtax webinar. And then you say 5 trillion, and some people, I had a partner of mine in my firm say, well, how in the world is that possible? And let me kind of walk through real quick. The income tax base of taxable income is 5 trillion a year. This is income after AGI. That's AGI, adjusted gross income adjustments and deductions, versus 9 trillion consumption. And the 9 trillion consumption is actually much more stable. So actual income in the US is approximately 10 trillion a year. And this statistic is several years old as well, but 10 trillion. So you have a lot of income. But over half of our nation's income avoids taxation because it's either an adjustment to arrive at AGI, such as retirement savings, or with other deductions, exemptions, exclusions, carve-outs, credits, loopholes. The list goes on and on, like the home mortgage interest deduction. That's a huge one. Our current income tax system brings in 10 trillion of income, but it goes down and gets whittled down to 5 trillion of income that we apply the tax on, otherwise described as taxable income. So this is what you get with lobbying, exemptions, everyone wanting a special savings. You erode the tax base down so low, and then guess what? Political feasibility steps in where, well, I really can't increase that tax base because I risk, disenfranchising constituents or making them mad, etc. So you can see the cost of an exhausted income tax base is basically, I can't really raise much more income to the U.S. Treasury from the income tax under an exhausted income tax base. It's just not politically feasible. The 30, 40, near 50% that pay a very small percentage of total Treasury receipts, good luck trying to run on a political platform that you're going to raise taxes on those folks, right? Okay, so what about why is the Fairtax consumption tax base so much bigger if we think about this exhausted income tax base? Well, I always say income comes from income. So that's your income tax base, one source. Spending or consumption, on the other hand, comes from income, savings, borrowing, or if people have, nefarious professions and thieve for a living, that's also another source of consumption for them. And actually, when you look at statistics, it's actually a much more stable tax base over decades of empirical data, that those personal consumption expenditures are actually a flatter line on the graph, if you will, than AGI, which is a measure of your adjusted gross income, which is much more erratic. So you also stabilize the consistency of tax receipts coming into our U.S. Treasury if you got rid of this cost of an exhausted income tax base. So let's move along here. IRS costs. Okay, where do we start? So 12 billion annual budget. That's a few years old, and the IRS contingent of employees, seems to hover around anywhere from like 88,000 to 100,000 folks. As best I know right now, we're around 90,000 employees in this government bureaucracy. 90,000. Let that sink in for a moment. And 12 billion annual budget. 12 billion is not a small number. Under the fair tax, if the income tax was eliminated, this cost was eliminated, you'd have a small treasury department that would, again, be single-digit percentages as far as proportionality of that $12 billion. Wouldn't even come close. Let's think about identity theft. There are over 1 million daily IRS database and system hacking attempts. All that would go away if the IRS wasn't there, like, for example, under a fair tax system. All the data privacy concerns would be virtually eliminated. In 2016, the IRS revealed that 1 million taxpayer Social Security numbers were stolen from the IRS database. They had known about this for years, but they didn't let the 1 million Americans know until several years later in 2016. It's just astronomical. So let's move on. Washington, D.C. and lobbying. We hinted to this earlier. This is a huge cost. It's a cost on companies. It's a cost on our congressmen and women, and all politicians in Washington, as well as us as individual citizens. So if you think about it, without the income tax, the cost of companies lobbying, PAC contributions would decrease significantly. Again, this is another cost in that 22% reduction in the cost of all new goods and services that replacing the income tax with the fair tax would bring about. But again, the cost of lobbying isn't really calculated in those Harvard PhD studies. And this is in the billions. Multinational corporations spent over 14 billion over the last decade with campaign donations focused on income tax lobbying. 14 billion over a decade. That's a lot of money. And those multinational corporations who pay 14 billion, that's another cost for those large companies that go up and build into their pool of costs that ultimately permeate into lower wages or higher costs at the register. So you say, well, okay, we get rid of this cost and we go to the fair tax. Well, wouldn't there be lobbying still? Yes, there may be some initial attempts to lobby Congress for changes to the fair tax, but the fair tax is naturally built to be lobby resistant. You say, what? Well, if anything is exempted from the fair tax, then the rate must go up. Like right now, the fair tax is set up with a certain rate, and really charitable contributions, when you spend that money on a charity, and education expenditures, and then any used goods expenditures, that's really the only exemptions built into the fair tax. So if you get an ambitious, maybe well-intended, but maybe not well thought through politician who says, well, we need to exempt medicine from the fair tax, it's just not fair, or diapers, or food, or baby formula. Well, okay, you can do that, but the way the fair tax is set up, you need a higher rate. So if you're going to collect less tax revenue by taxing less consumption, what's the rate going to be? And so it immediately goes into a national conversation, as opposed to most lobbying efforts. And Ron Malero and his buddy Bob Paxton on the weekly Fairtax Power Radio podcast. They talk about this. There's thousands every 2-year congressional cycle, literally thousands of bills that go forward. Not all become law, but many do. But thousands of attempts to make new income tax law and changes to the tax code, and they're very pointed in particular lobbying efforts. For example, should golf equipment be, a qualified, medical expense for, tax return purposes if I'm using it for therapeutical rehabilitation? You get silly like that, but 99.9879% of America doesn't care about that bill that goes forth, and that 99% doesn't know about it. If you have a national fair tax conversation that you want to exempt something, and the rate for the entire nation is going up because you're going to exempt XYZ from the national fair tax consumption tax, all of a sudden everyone's involved, and it's going to be a tougher proposition. What about the cost of lost productivity and the opportunity cost of time and effort that could now be employed to solve problems and expand a business, cure cancer, invest more time with your family and friends and coworkers? All this cost, all this time lobbying and going through all these machinations, it's just wasted time. The income tax code is the second most lobbied area in Washington, and that would virtually all go away. The stats I have, there's about 12,000 lobbyists in DC, about 22 lobbyists for each member of the House and Senate, 535 in total. And just think, you could clean up a lot of Washington by getting rid of the income tax, this cost of lobbying. Let's see, IRS tax court cases. Costs, time, effort. Over 90% of those prosecuted. Ron and Bob had a good Fairtax Power Radio podcast on this not too long ago. Over 90% of those prosecuted are ultimately exonerated. So the IRS ends up going after people, and 90% of them are exonerated. Well, here's the catch. It's after years of court cases, legal representation, oftentimes small businesses going under during the process, having to lever up with credit card debt just to survive while you go through the proctology examination of an IRS audit. And 90% of the time, no issues. All the costs that the IRS employees use to hire legal counsel to prosecute us as citizens, that comes out of our pocket as taxpayers as part of this cost. Without the income tax, this virtually goes away 100%. Now, there's still be a few cases here and there, that lawnmower guy that gets prosecuted because he's not charging the fair tax, but we're talking fringes here. We're talking very minute. So let's move on here. Costs of U.S. corporate. Let me check for questions real quick here. I think Randy had a comment. I understand IRS is working on some rules related to income derived from cryptocurrency and Bitcoin trading. Is there a chance that these new currencies would add to the evasion under the current income tax law? I am ignorant on that, Randy. However, I would venture a hypothesis that would be a big resounding yes. And then also imagine the long-term future pension costs on 100,000 IRS employees eliminated from the federal budget. Great point, Randy. Yeah, we forget the nice packages that some of our federal employees get, including IRS agents. That's a huge cost savings, and I imagine that's in that $12 billion a year figure. But yeah, great point. Let's see here. So, cost of the U.S. corporate income tax. U.S. business competitiveness. Let me start with this. There's a nonpartisan Joint Committee on Taxation and the Congressional Budget Office, which we've all heard about, the CBO. They have data that show that workers effectively pay 1/4 of corporate taxes. And you say, what? Other studies estimate workers bear up to 45 to 75% of the corporate tax burden. Now, the person maybe that hadn't studied this or isn't aware might say, wait a minute, the corporations pay those taxes. Those rich corporations, they're the ones who pay the IRS, right? It's not the employees. Yes, as a matter of technicality, you would be correct. But basically, again, it's this concept of embedded taxes. The cost of the corporate income tax gets borne by employees in the form of lower employee wages, fewer employees hired, less R&D, innovation, advancement in society, and then also with us and the public, lower dividends. Ron and Elaine are retired, for example. So if they're getting dividends or distributions, in the form of IRAs, 401k returns, etc., those are lower because of these companies having this corporate income tax burden. So in October 2017, not too long ago, Council of Economic Advisors estimated that the average household income would increase by $4,000 annually based on reducing the corporate tax rate to 20%, which it did a year and a half ago under the Tax Cuts and Jobs Act. And another study by a Harvard professor and former Reagan advisor, Martin Feldstein, found a 20% corporate tax rate could deliver a wage boost of $3,500 per household annually. And you've actually seen over the past year and a half, finally, wage growth in America. If you really look at the stats, we'd had stagnation in wage growth where, maybe it tracks along barely with inflation, but you finally have seen the American economy break out with actual wage growth outside of just inflation over the past year and a half. And again, you think, well, that's just lowering it to a 20% corporate income tax rate. Economists at the OECD, the Organization for Economic Cooperation and Development, note that the corporate income tax is the most harmful to the economy and adversely affects economic growth. So this is certainly a nonpartisan group that's they nerd out on the numbers and they know what the corporate income tax does. And there's a huge cost there if it's the most harmful to economy. So one last thing here before we move slides, stability. I don't have this as a bullet point, but stability is great for business. Businesses crave and thirst for stability, and the current tax code changes almost daily. We talked about the thousands of tax code change bills each congressional cycle. The Fairtax, on the other hand, would be stable with virtually no compliance cost and no business-to-business taxes, lobbying significantly diminished, and a steady outlook on business tax burdens, which would be zero, by the way, and only a couple 100,000 businesses out of the 100 million U.S. businesses would even have to worry about the small burden of collecting and remitting the fair tax onto the state and then onwards onto the national treasury. So let's keep moving on here. Cost to our freedoms as Americans. What is the cost? So is there a cost that the IRS needs to know everything about you? Some things that the IRS knows about you, your income, how, from, whom, and when, your expenses, if you have deductions or a small business, to whom the expenses were to and for what. If you have a business auto or auto in your business or small business, the type of car, how many miles you drove for work, your Uber side job, the mileage for your charity and personal purposes. You have to keep a log. They've got apps for that now. Your medical expenses, whether or not you have health insurance, your home size, square footage of your home office, whether or not you own your home, its cost, any major improvements, depreciation on your home, bank accounts, your deposits. If you have any deposits in cash in excess of $10,000, got to be reported to the IRS. A lot of people don't know that. And if you have a lot of deposits just under $10,000, the IRS might call that structuring and come and seize your bank accounts anyway because they think you're up to some nefarious scheme. Your investments, the IRS has to know about your stocks, your bonds, your interest earned, dividends, capital gains and losses. How much of your dividends are qualifying dividends? What is the basis in your various investments? Good luck tracking that stuff. That's always a mess. The IRS knows about your charitable affiliations, which organizations you give to and for how much and when. And whether you're saving for retirement in college. So the IRS has to know how much each year, which organizations, which 529 plans. When you withdraw the money, is it a qualifying expenditure that you use it on? You've got to keep a shoebox full of receipts to keep all that in check. So your life without the income tax would exclude this cost and will include your government not having to know any of these items about you and you not being obligated to supply these intimate details to the government. Many of these details you don't even share with your family members. So think of the effect on personal and individual freedoms and resulting trust in our U.S. government and its institutions. Much of the animosity, this is another cost we don't think about. It's intangible. You can't see it or touch it. But much of the animosity between us as citizens and the government is brought about due to income tax issues. So if you think about it, given the Bill of Rights are currently being violated under our income tax system, and really think about it, the First Amendment, free speech, like you can't, if you're a 501c3, you can't say certain things. Your free speech is targeted. The Fourth Amendment, illegal search and seizure, civil asset forfeiture gets rid of that. Probable cause, out the window.
So he's still going. I've lost contact. I got completely kicked off.
Oh, I can hear you, Ron. Amendment number 5, due process. You can't deprive people from life, liberty, and property. You can with the income tax. And then amendment number 6, jury by peers. In the tax courts, it's not applicable. All of those are huge costs that we don't think about as far as our freedoms as Americans. So let's think about societal and civility costs, class warfare. IRS has been used as a weapon, and it's been used on both sides of the aisle. Most recently, Lois Lerner, under the Obama administration and her Tea Party group scrutiny, they were asking things like for meeting agendas, what were the agenda items covered, names, personal details, and been basically just harassment and delays in improving their new 501c3 organizations with like anything with like Patriot or Constitution in their name. They ultimately made a settlement here just within the past, I think it was at the beginning of this year, where the IRS said they had to admit they were wrong, pay settlements, and another cost. Guess what? All these settlements that go back to these folks that were wrongly treated out of the IRS budget that you and I pay for. So even when the IRS messes up and they have to remunerate some money for past sins, you and I pay for it. It's unbelievable. And then if you think about class warfare, no matter what side of the aisle you're on, it just gets old. You're going to tax and spend. You're just going to give tax breaks to the rich, and it just goes on and on and on. Think of all the costs we could save of making our politicians focus on something that actually maybe was more meaningful instead of the same old stuff just repackaged and spit back out every 2 and 4 year cycle. And then you think about the intangible costs. This divides our people. Families don't have Thanksgiving dinner together because of these silly fights with politics with society being put into 2 buckets, primarily by our politicians, aimed at dividing us and instigating class warfare to get their political solution. And all of that would just go away under the fair tax. It's a huge cost, and it's very hard to put a number to. But if you think about the viability long term of the country, the class warfare and civility, it's the class warfare has to go away and the civility has to go up. Think about environmental cost. The amount of paper printed out, draft after draft of corporate and individual income tax returns each year stretches around the world multiple times. If you just print out the forms one time, all the forms, all the instructions for all the tax returns, all the various types of taxes, they spread around the earth, laid side by side 28 times. I always say this, and it just goes by with not enough fanfare. And Ron and Bob had a great Fairtax Power Radio webcast on this over a year ago. But the fair tax would be the single biggest piece of legislation to improve the environment and help our environment in the history of the United States. And you think about all the EPA regulations and rules, the fair tax, it would be such an encouragement for used items and gently used items. So it's a huge cost that we don't think about. So cost of regressivity to the working poor. We touched on this earlier, but the payroll tax, it brings in over 40% of the nation's treasury. So you think about that. Okay, great. About, let's just use half, just for close enough for government work as we talk here. Half of our treasury receipts comes from this payroll tax that has the same rate for everyone working. It is the most regressive tax of all. And it hurts our working poor because if you've got to give close to 10% of your money and you're trying to get out of poverty, and 10% right off the bat goes to the government instead of you, your family, your education, yourself, bam, you are hit with an incredible barrier to rising and getting out of that horrible cycle of poverty. And then to add on, with our current system, the cost of education. All of our education, if you do want to have post secondary education, you have to use post-tax dollars. So you have to pay your taxes first and then pay education, which is, of course, gotten out of hand. Under the Fairtax, your expenditures, which are pre-tax, made for education, are not taxed. So you've got two huge costs that really work to keep down our working poor and not allow them a mechanism to get out of poverty. Totally unshackled with the Fairtax. So I really like that. Let's move on. Opportunity costs. So what are the costs of not enacting the Fairtax? What are the costs of doing nothing? Sometimes we don't think about this. It's kind of a business term, opportunity cost, right? Well, let's think about some of the things here. The ultimate result of replacing the income tax with the Fairtax is that consumers will still pay the cost of U.S. taxes. So pause and let that sink in. Okay, I guess we're still going to pay it, right? We pay the Fairtax at the register. It's just that they can see it now. By law, it's on their receipts, as opposed to embedded and shrouded in mystery and inefficiency and unnecessary costs along the way. In total, though, there are three primary drivers as to how your personal spending power will change under the Fairtax. So again, these go into the bucket of what are the costs of not moving forward under the Fairtax. Oh, let me get my slides back there. So first, you keep your entire paycheck. You receive the monthly prebate. Prices of new goods and services will increase with the Fairtax, but to a large part will be offset by the elimination of those embedded costs from the prices of everything we consume. The sum total of these three aspects results in disposable personal income increases 2% in year one under a Fairtax enactment and income tax elimination, and 9% in year 5. So after the Fairtax is enacted, 5 years after income tax is gone, your disposable personal income goes up 9%. That is mind-blowing. Our economy will be out of control with heat. And again, good problem to have. We'll take it. We'll deal with that, right? It's a first world problem. Real wages increase 10% under the Fairtax, and these are all based on Harvard PhD and other PhD studies that are very exhaustive. So this is the most researched piece of potential legislation in the history of the U.S. U.S. GDP is up 2.4% in year 1 and 11% in year 10 after enactment. That's a pretty good increase versus what our GDP increase would be otherwise. Really a huge increase. So you look at all these things: GDP, real wage, net purchasing power, disposable personal income, all go up. Another thing, guess what studies have proven? Charitable organization giving growth will go up. And you're like, wait a minute, is that right? But I don't get a deduction anymore. You're going to have more money in your pocket. You keep your whole paycheck. You get the prebate, and with more personal disposable income, more money left in your pocket at the end of the day. Basically, as Americans, when we have more money, we give more. And what does that do for society? That helps offset some of those other costs that we talked about, the civility, societal costs, class warfare. So you have those going away, plus more charitable giving. It's like if you were in the 1960s and one of the hippies and everything, like just want love, man. This is the act for you. This is the legislation. You've got peace, hope, and love, and everyone is just singing Kumbaya, holding hands, maybe strumming a guitar around a campfire with the Fairtax. So we say not collecting owed federal taxes from criminal people living in the U.S. illegally. This is a huge cost. We touched on it earlier, but with the income tax, you just have a huge chunk of evasion, and it's not right, and that creates animosity, class warfare, societal strife, because we know there's different groups of people that aren't paying their federal burden, even though they're here in the U.S. Benefiting from the benefits of the U.S. So again, another huge cost goes away under the Fairtax. Ron and Elaine and Randy, I'll pause and let's open it up for questions.
Let's see. Can you hear me?
I can hear you, Ron.
Okay, good. Because I was totally kicked out of the system. I had to reboot my computer and get back in.
Oh,
And
no.
yeah. Did we answer all the questions? Randy has several questions there listed. Were they all addressed?
Yep, we went through those
Okay.
as we went. Yep.
Okay, and on the chat side, Randy has put some good information there. He's put the links to the tax evasion study that was done by Dr. Richard Sebula of Jacksonville University that Jade referred to earlier. I think
nice.
that's. I'm going to load a slightly different slide. Are you all set, Jade, or?
Yeah. Those are my prepared remarks, Ron. So I'm happy to take any questions, comments, or if you and Elaine had any additions on cost. It's really, you really had to stop and think about it because there's so many intangible costs of the income tax system, the true cost, and there's probably a few I didn't think of. Like Randy brought up that one with the pensions and stuff with 100,000 IRS employees. That's huge.
Oh, and I was doing some research for the next recording session for Fairtax Power Radio, and I was there. There's another cost that we're going to hear about pretty soon, and that is the IRS is considering creating a taxpayer anxiety index. All right, this is yeah. So if you look that up on the internet. I found this report on Fox. Actually, Bob found this on Fox Business. That's just one more aspect. I mean, if they do this, it's going to mean more employees, more taxpayer funding. For a tax system that is totally out of control and doesn't meet our needs, and yet we can't seem to get the people in Washington to look at something else, something that will actually work and is working around the country in the form of sales tax at the state level. So I got to upload a little slide here. I'm going to ask for people's indulgence here for just a second.
Yeah. And Ron, while you do that, your wife, Elaine, astutely points out the IRS produces over 1,200 different tax forms and pamphlets and instructions each year. That's amazing.
Yeah. That's
amazing.
crazy. Yeah. Okay, this is loading. I've got a very simple screen here. I'm going to ask people to take a look at. Okay, there are ways that you can help folks. You can go to fairtax.org/1040. Now, fairtax.org is the website of the Americans for Fair Taxation. All volunteers. Now, Elaine and I are volunteers in the Florida Fairtax Educational Association, all volunteers. All of the Fairtax people around the country are all volunteers. There are no paid positions, but there are expenses. Like the Fairtax.org has this massive database they have to maintain. That doesn't come cheap. So Fairtax.org/1040, if you go to that website and you can commit to sending in $10.40 a month, it would be very helpful. Jade mentioned the Fairtax guys. We have a simple website. Yes, we're on Facebook and we're on YouTube and so forth, but we have our own website, fairtaxguys.com, in which you can go and take a look at any of our past 164 programs. They started out as just podcasts, and about a year ago, they became digital TV. And then finally, popfox.com. That's a website you can go to and indirectly communicate with your legislatures. All right, you go to popfox.com, you sign up by giving it your name and address. When it knows your address, then it knows who your representative is and who your two senators. And then you can go search for HR 25. That is the Fairtax bill, HR 25. And we ask you to put some positive comments, be as brief or as lengthy as you want. That's totally up to you. And your comments will go to your legislatures and you will get a response. So we need to let these people know. work on your representatives. If your representative is a co-sponsor, great. Thank them and ask them to influence other reps to become co-sponsors of HR 2025. If they're not a co-sponsor, well, you know what to do. You can put some pressure on them. Recently, in the past month, we've acquired 3 more co-sponsors for the Fairtax. Gary Palmer of Alabama, Michael Waltz here in Florida, and John Rutherford also in Florida. They have all, in the last few weeks, become co-sponsors of HR 25, which we're very grateful for. So,
that's great.
Anything else?
Ron, Elaine and Randy wanted to mention fairtaxlogostore.org.
Oh, yeah, yep. Yeah, I should have put that on there. Fairtaxlogostore.org, fairtaxlogostore.org. You can go there and order, like whenever Elaine and I go to an event or a meeting, we're wearing a Fairtax shirt. And I'm pleased to say that at my request, recently they started having Fairtax polo shirts with pockets in them. I like a pocket in my shirt. And but hats, there's mugs, there's pens, there's palm cards. We're working on a revision of the palm card right now, but there's still a bunch of them left in the store. There's the Prebate cards, which is a business size card. And if you watch the weekly episodes of Fairtax Guys or Fairtax Power Radio, we always mention the Fairtax store. Okay. And I able to do some post-production work with that before it's actually seen, so I can put the websites up there and so forth. But yeah, fairtaxlogostore.org. That's a way in which you can purchase something and demonstrate your support for the Fairtax by getting, wearing something or getting a travel mug or something like that, a little tote bag or whatever. Good stuff in there. Okay. Anything else we need to mention?
I don't see anything else, Ron. Sure appreciate you guys.
Well, we appreciate your doing this. One of these days, Jade, we're going to actually have a webinar when you're home, and you don't have to get up at weird hours to do the webinar. We appreciate your being able to mix your travel schedule with the webinar schedule. You were like 3/4 of the way through your presentation, and I completely lost contact. Completely. And fortunately, I went to see my wife's computer, and you were still going. So I was pleased to see that the webinar didn't end. It's just my connection to it ended. So it took me a few minutes to get back in. Anyways, if that's it, if nobody else has any questions, I think I'm going to click the button that says stop broadcast. A video of a copy of this webinar will be created and will be available here on this site, Webinar Ninja. And I will, when it's available, download it, and I'll put it on the flfairtax.org, the Florida Fairtax website also. There's a section there for past webinars. Probably take me a couple days to get that done. So if that's it, if there are no other questions, we're going to say good evening, and we'll be back on the 3rd Thursday in September, because we're doing these every 3 months. And if you'd like to make some recommendations on what you'd like to see in the webinar, send us an email. All right. You can send an email directly to me at info@flfairtax.org. info@flfairtax.org. Okay. Otherwise, good night, everybody. And thanks for attending. We appreciate it. And let other people know about the webinar.